provide additional insight into Ryan's report. So before we get started, this is a monthly call. We held these prior to COVID-19, in fact, going back to the Great Recession, to provide a little deeper dialogue and analysis of what release reports. We've had, it's interesting, a variety of interest in these press calls over the years. Some of you on the phone have been loyal, tried and true, and have joined us every month for the last decade or so. Today's report, as you've hopefully seen in the numbers and the data, is pretty significant. And as we've been saying for the last 9 weeks, the April jobs numbers would be the most telling indicator of COVID-19's impact on our state's economy. As you saw in the report, we went from record low to record high unemployment in a matter of months, which is quite frankly unbelievable. Ryan will again tell a deeper story about what we've seen. And so I think that, as Ryan's report will indicate, certainly probably not surprised that we're in double-digit unemployment, but again, the swiftness with which COVID-19 impacted the state and the country is still staggering. And so Ryan's report will get into a little bit on the numbers. I will briefly go over yesterday's initial claims report. I'll then speak to some workload indicators, what we're seeing with the unemployment insurance program, address some things we're seeing in the call center and some solutions that we're exploring. And then I will close out with an update on where we are with refusal to work, what we're seeing from employers, and some data points around employers requesting for their employees to come back to work and reasons for refusal. And I do want to leave as much time as we can for Ryan's report, because that's, again, the most significant data point we've seen in the last 9 weeks. I want to leave a lot of time for questions. So in the last 9 weeks, we've had over 475,000 unemployment claims. About 70,000 of those were the pandemic unemployment assistance claims. We've paid more than $800 million in combined PUA and PUC, pandemic unemployment compensation. That's the $600 a week available to regular UI and PUA claimants. And we've paid just over $500 million in regular unemployment. All of these data points are historic. The $800 million in the federal benefits certainly is staggering that much money has gone out in such a short period of time. As a reminder, these are federally funded benefits. They do not come out of the state's trust fund. Regular unemployment does come out of the state's trust fund, which is funded by premiums that employers pay on the wages for their workers. Another workload indicator that we've been asked to speak about recently is percent of claims paid. So this is an indicator of where we are with not just accepting the application, but paying on those initial claims that we report each week. We're over about 86% of claims paid, which is a really positive statistic if you look nationally at where some states are with paying unemployment claims. The balance of those that have not yet been paid can be attributed to a variety of factors. It could be that there are interstate wages from another state that we need to engage with that state to confirm those wages. Every state's in the same position Colorado is. So if you imagine us having to reach out to our counterparts who are in the same workload situation we are to validate wages, that does delay claims. Some claimants are not yet monetarily eligible for unemployment, so they're waiting for what we call the quarter change to become monetarily eligible. Some claimants have not yet come upon their payment request date. Again, depending on the claim type, this is either every week or every other week where they're certifying us that they're able and available to work and they are still unemployed through no fault of their own. Also that they've had any work, return to work offers that they've refused. As far as call center, which seems to, again, just be inundated with, quite frankly, an overwhelming amount of calls that we are not able to address the sheer demand. For some perspective for you, pre-COVID, we were around 1,000 to 1,200 calls a day. Now we're looking at anywhere from 10 to 15, 20,000 sometimes unique callers a day, and we're getting to about 4,000 calls. So certainly there are some calls that are going unanswered, quite a few actually. creating some frustration, which we realize, and in a minute, I'll speak to some of the solutions we're exploring. Just to remind you, we did stand up a separate call center for PUA claims. We were able to quickly staff up with a third-party vendor to answer PUA claims. Keep in mind, these are far less complicated claims to respond to and help people file. Regular UI is a very complicated benefit system. We sometimes have up to 6 to 8 to 10 weeks of intensive training for new call center agents. We did add 90 temps recently, but these folks are, I believe, in week 2 of their training. So they are not yet on the phones full time. Once they do, we will probably have 200 to 250 agents on the phone at a single time. Keeping in mind the PUA claims are fairly easy to help a claimant navigate their questions. The regular unemployment claims can range from a question about monetarily eligible to what I mentioned, the interstate wages. They become far more complex. So what we're trying to address, what are the reasons individuals are calling into the call center? And they are the ones I just mentioned. These are very technical issues that sometimes there is no resolution but for to speak to an agent. And for those callers, we are hoping to provide some more dedicated and focused response and resources to them. There are some reasons people are calling to the call center and they actually don't need a call. One of the big reasons we've seen lately is questions about worker rights with regard to refusal to work. Again, we're hoping to augment all of the other communication channels, continue our town hall series, push out information on social media on those questions that don't require a human interface with a call center agent, so that folks don't have to feel the frustration of not being able to get in and get their questions answered. Some of the things that we're looking at: contracting with a technology vendor to create a virtual agent so that a caller could, on the front end, have automated responses to a variety of claim-related questions. Ideally, it would interface with our system, so it would even get to more detailed claimant-specific data points like, when will I see my benefits? What's my benefit amount? Is my paperwork submitted correctly? And so we're currently now exploring a solution with a vendor, in very close talks with them, and hope to have something to announce shortly in that front. We're also developing how-to video guides based on the most frequently asked questions for calling into the call center, realizing that not every question can be answered self-service through a chatbot or an FAQ, but again, creating just another medium by which we can get out information. And we're also looking at creating, and we're in the exploratory phase of, we've had great success with our file a claim callback form. Keep in mind, this is just for individuals filing a new claim. It is not to help triage questions on existing claims. And so expanding that capacity so that it could be topic-based callback in a scheduled format. One of the issues with callbacks is sometimes you're just taking a chance that the claimant might answer the phone. And we reach out multiple times and are unsuccessful. A scheduled coordinated callback by topic would certainly greatly reduce the need for somebody to call in and create more coordination and structure. And then lastly, I just wanted to talk about refusal to work. So we launched the employer form online to report refusals to work. To date, we've had just shy of 1,000 submissions. These are not unique, so these are not 1,000 employers. Most employers are submitting multiple submissions in each form. The reasons that are being cited for refusal to work from the claimant are a vulnerable population, residing with a member of a vulnerable population, or a childcare issue. And so we are actually seeing about a 15% denial rate of benefits in terms of the claimant being determined ineligible to continue to receive benefits, because our fact finding determines the employer has in fact met all safety protocols, and the other circumstances of either being an at-risk population or living with one, we weren't able to secure documentation from the claimant. So with that, I am going to go ahead and, unless we have any questions, which would be unbelievable that Vinny would be the only one, but I think with that, perhaps you're all just mostly interested in hearing about this month's employment situation, which it looks like Vinny, we can address the one question about fraud. Fraud is the thing I neglected to mention. You've heard recently in the last week or so about some national fraud schemes, some of them from out of country, where it's a very sophisticated scheme that is using a variety of mechanisms to commit UI fraud. Knock on wood, we have now not seen that touch Colorado at this point. There is a very active national fraud detection and prevention effort, and we have a number of tools available to us to ping a number of databases. There's a national suspicious actor repository database that our national workforce partners stood up. We have a team of criminal investigators that are constantly and continuously receiving and vetting and investigating fraud tips and complaints. And so we've not yet seen, fortunately, those fraud schemes hit Colorado, but given the depth of this economic impact, the predatory nature, unfortunately, of some fraudsters, and the just sheer volume of claims, certainly every state would likely see some sort of a fraud attempt at some point. Yes, we will. Let's get to Ryan, and then we will ask questions at the end, if that's okay. Yeah, can we go ahead? Ryan, I will pause here, and we will get to everybody's question at the end, because I certainly want to give enough time for your report.
Okay, I can do that.
Okay.
Thanks. Thanks everyone for joining. The data I will discuss today are based in part on estimates from 2 surveys. Statistics like the unemployment rate, labor force, total employment, and the number of unemployed are derived from a survey of households. This is also known as the current population survey. Simply put, the household survey is meant to capture the employment and labor force status of individuals within Colorado during a given period. The household survey also includes the self-employed, independent contractors, farm workers, and those not attached to a traditional payroll employer. However, we are unable to break out those individuals at the state level. Non-farm payroll jobs estimates come from a survey of business establishments and government agencies, and they are intended to measure the number of jobs, not the number of people employed. These estimates exclude employees in agriculture, private households, and the self-employed. Other useful data that result from the establishment survey are private sector hours and earnings. As we noted in today's press release, the reference period for the establishment and household surveys was the pay period or week that includes the 12th of the month. Therefore, these data provide a snapshot of Colorado's employment situation as the state was observing closure and stay-at-home orders related to the COVID-19 crisis and efforts to contain the virus. Revisions to April data, along with preliminary estimates for May, will be released June 19th. So let's start off with results from the household survey. April seasonally adjusted unemployment rate was 11.3%. This is the highest unemployment rate for Colorado since comparable records began in 1976. The state's previous high unemployment rate was 8.9%, and that was from September to December of 2010. March's seasonally adjusted unemployment rate was revised upward from 4.5% to 5.2%. In comparison, the U.S. unemployment rate in April was 14.7%. That is the highest monthly unemployment rate for the nation since comparable records began in 1948. While there is common consensus that the unemployment rate for the U.S. during the Great Depression was around 25%, there are no official data series to verify that fact. It was actually the lack of data during the Great Depression that spurred the creation of the current population survey. In April, Colorado had the 16th lowest unemployment rate in the nation. Connecticut had the lowest rate at 7.9%, and Nevada had the highest rate at 28.2%. At a sub-state level, there's an extremely wide range in unemployment rates by county. On a not seasonally adjusted basis, Pitkin County had the highest unemployment rate in April at 23.1%. 4 other counties had rates that exceeded 20%. Those counties are Gilpin, San Miguel, Summit, and Eagle. Those counties all have high concentrations of leisure and hospitality industries. The counties with the lowest unemployment rates, that's below 3.8%, are all concentrated along the eastern part of the state. That's Cheyenne, Kiowa, Baca, Yuma, and Washington counties. Conversely, those counties all have low concentrations of leisure and hospitality industries. It is recommended to compare county rates to the statewide, not seasonally adjusted unemployment rate, which was 12% in April. Among the 7 metropolitan areas in the state, Boulder and Greeley had the lowest not seasonally adjusted rates, 9.7 and 9.8 respectively. Fort Collins at 11% and Pueblo at 11.7% were slightly lower than the statewide rate of 12%, while Denver at 12.1%, Colorado Springs 12.3%, and Grand Junction at 12.6% were slightly higher. Now, I have mentioned this in prior calls, but not all of those who are unemployed receive UI benefits. The unemployed can also include job leavers, entrants to the labor force, and individuals who have lost their jobs but are ineligible to receive unemployment insurance. However, at the peak of the Great Recession, more than 35% of jobless persons received a UI payment, and that rate jumps up to more than 60% if federally paid unemployment benefits were also included. We estimate that in April, around 75% of unemployed Coloradans were receiving some kind of unemployment insurance benefit in April. That includes regular UI payments, as well as those from the Pandemic Unemployment Assistance Program for those self-employed and gig workers. Given efforts to contain the spread of COVID-19 through closure and stay-at-home orders, the share of unemployed on temporary layoff is historically high. And we estimate that in April, roughly 80% of the unemployed were on temporary layoff, meaning the individual expected to return to their employer at some point. That share was under 10% in 2019. When looking at the number of employed individuals in the state, that share has dropped drastically since February. In February, when the seasonally adjusted unemployment rate was historically low at 2.5%, approximately 67.7% of Colorado's 16 plus population were employed. In March, that ratio decreased to 64.7%. And in April, that share fell to a historically low 59.1%. Finally, we estimate that around 10% of those employed individuals are working part-time, but would prefer full-time hours. That is a more than threefold increase in the involuntary part-time share compared to 2019. Now shifting to the establishment survey. The preliminary estimates show that on a seasonally adjusted basis, Colorado non-farm payroll jobs declined by 323,500 from March to April. That monthly drop brings total payroll jobs in Colorado down to 2,473,400, which is the lowest level since July 2014 and essentially wiped out the past 5.5 years of job gains. The private sector represented 96% of the monthly decrease, losing a total of 311,400 payroll jobs. Government shed 12,000 jobs in April. March's payroll jobs figures were revised downward to show a decrease of 16,500 over February versus the previously reported decline of 3,900. Combined with March revised figures and preliminary April numbers, the state has lost 340,000 payroll jobs since February. But as a word of caution, April revisions could be fairly substantial next month in either direction. So it will be crucial to look out for those numbers. Additional responses to the establishment survey are key in determining how much payroll jobs are revised from one month to the next. Wayne, I'll get to your question in just a second. Let me wrap up here and I'll talk about the unemployed. At the industry level, every major industry sector, except for information, experienced significant over the month job loss in April. I will highlight the top three since this was also covered in today's press release. Leisure and hospitality lost 148,100 jobs in April, which is 46% of the state total. That leaves that industry with an estimated 184,900 jobs, the lowest total since December of 1992. Leisure and hospitality was also the largest driver and total non-farm downward revisions in March. Job losses for education and health services totaled 43,800 in April. However, the healthcare and social assistance portion of that sector shed the majority of jobs. This is primarily due to COVID-19 impact to businesses like dentist office, chiropractors, optometrists, and child daycare services. Trade, transportation, utilities shed 41,800 payroll jobs from March to April. Retail accounted for 61% of those losses. And finally, I will cover job losses by metro area. We do not break out non-farm payroll job estimates by county. Leisure and hospitality was the primary industry loser in each area. So just kind of going from highest losses to lowest losses by metro area. Denver jobs declined by 171,300. That's the lowest level since January. And that leaves payroll jobs at the lowest level since January of 2015. Colorado Springs payroll jobs declined by 32,700, leaving payroll jobs at lowest level since June of 2015. Fort Collins declined by 19,300. Payroll jobs now at lowest level since January of 2013. Boulder lost 17,500 jobs. That's the lowest level since September of 2015 for total payroll jobs in Boulder. Greeley lost 11,000 jobs. That's the lowest level for that metropolitan area since March 2017. And again, that's looking at total payroll jobs in those areas. Pueblo had a decline of 8,400, the lowest level for payroll jobs for Pueblo since September of 2005. And Grand Junction saw a decline of 8,100 and lowest level for that area for payroll jobs since October of 2005. And yeah, absolutely, we'll send out talking points. I think I touched on about 50 different data points, so we'll definitely help you all out there. With that, Alex, I'm going to look over some of these questions here. Would you like to add anything to today's call?
Sure, yeah. We just recently, in the past few days, got these payroll jobs numbers to start combing over. This month is our first clear estimate. Even though we saw some effect in March, we knew that with preliminary estimates for March, that we would likely see some big revisions. So we've taken the unemployment insurance claims data by industry that we have and done some comparisons to the payroll jobs estimates over a similar period of time, just so we can get an idea of how well they are giving us an indication of job losses by industry. And we found they're pretty right on with overall job losses. UI claims representing about 80% of overall job losses for March and April. And across industries, we're seeing, for the most part, a pretty good representation when you have almost 12,000 claims, UI claims in construction for the March and April period, and we've got just a little over 12,000 lost jobs over that same period. So this should give you an idea of like how much valuable information those weekly claims data are providing you on what we're seeing across industries. The one area where we see a pretty big difference between UI claims and the estimate of job losses is in leisure and hospitality. Over March and April, we had about 85,600 claims filed and almost 150,000 lost jobs. Part of the explanation there, I don't think that the payroll jobs estimate is overstating the job loss. I think probably what we're seeing there is the impact of the type of work done in that industry. You have seasonal workers who won't necessarily file for unemployment insurance. Also workers who come from out of state who may have returned home. So there are various reasons to think that that there's a pretty solid explanation for why the claims are lower than the job losses in leisure and hospitality. There are some sectors where we see more UI claims than estimated job losses, such as in mining and transportation and utilities. And so we may see some upward revisions there, but I would caution, I mean, these data are not perfectly comparable. So it also just may be a fluke of the differences in the data. So I just wanted to add that, and we'll take any questions.
And Alex, I just caught up in some of those questions that came through. I had a request for Huerfano and Los Alamos County unemployment estimates for April. Huerfano County was 12.4%, and that's not seasonally adjusted. And Los Alamos was 10.5%. And Wayne, I know you asked me to repeat in terms of the underemployed. Again, this is a rough estimate, but we estimate that around 10% of those employed individuals in April were working part-time, but preferred full-time work. And again, this is a more than threefold increase from that share in 2019. And finally, I had a question of, does leisure and hospitality include restaurants? Yes, it does. It's going to be one of the primary drivers in that super sector in terms of industry employment.
So I just wanted to jump back up. Well, no, I'll wait, Ryan, until we get through the data questions. Looks like we had another one submitted.
So I think we're getting a lot of county level, and is that something we can also just distribute that spreadsheet? Sure, I'm happy to go over it, but we do have like 64 counties. Again, so for Pitkin County, again, hold on, let me get all my data right here. So again, Pitkin County had the highest unemployment rate at 23.1%. And then I believe Eagle again was above 20%, and Eagle's unemployment rate, not seasonally adjusted, was 20.5%. Yeah, the question of, do employers list furloughed workers as still on the payroll? It really just depends on how employers will interpret the survey and basically how their payroll is reporting it. So I think that's a yes and no answer. Alex, do you have anything to add to that particular question from Aldo?
I believe if they are not getting paid, then they're going to be counted as unemployed. Not they won't be counted on payroll.
Can I just go back up to Vinny's first question, because it does kind of set a reminder for me, just a weekly reminder. I think it bears repeating about fraud. First of all, Vinny, I don't think we've seen also the other issues in any states with duplicate counts of claims. Again, that does not seem to be an issue in Colorado. While, as I mentioned, we haven't seen any broad-reaching schemes recently, we did hear of an instance where folks were reporting they're getting calls from our division being asked for bank routing information and other information. And I think I said this last week and the week prior. We will never call a claimant and ask for personal financial information. That is not something that's part of the claim filing process or the payment eligibility process, benefit eligibility process. So we will be working on our messaging to claimants to make sure they understand that is not something we would ever call a claimant and ask for. Jeff, do you want to speak to Lori Jane's question?
Yeah, I will. I'll just piggyback on what you just said, though. So, want to emphasize we would never ask that question, even if it appears that the call is coming from our division. So, there's sophisticated scams out there where they can spoof our phone numbers. And so that's one of the challenges is the level of sophistication. So it appears as a number that might be coming from the department, but just emphasizing what Chair said, we would never ask for that information. So if any claimants ever get a call of that nature, please just hang up and block that phone. So yes, there's a question about the delay of payments. Of the payments that are delayed, how delayed are they? Is it possible some people haven't been paid for weeks, et cetera? And what about the $600 payments? So there are, this gets into some level of nuance within claims. So I'm going to answer this as best that I can. What we're seeing is if there are no challenges on a claim, they're processing just fine, to Cher's earlier point. So in the only incidents where we're having challenges where a payment might be delayed is if there is a challenge on the claim, meaning perhaps their wage data was entered inaccurately. Perhaps they failed to type in their driver's license appropriately when asked for that, or if they had a challenge with their social security number, or if they don't, they can't demonstrate their identification, things along those lines. Cher also mentioned if they have combined wage claims where partial earnings were from another state and so forth. So in those instances, some of which are driven by claimant error and some just require further administration, those are the ones that have the biggest challenge with regards to processing. Yes, those can take 3 to 4 weeks to process, depending upon the nature and severity of the issue or the complexity of the issue. To answer the second question, yes, it would also delay the $600 payment. In other words, we're not going to start paying out these $600 additional payments until we have verified all information, and that is delivered in concert with their base payments, with their base benefit payments. So that is generally what one can expect if there are challenges on a claim. It could take a number of weeks. Doesn't mean it always takes a number of weeks, but it could, depending upon the specifics and nature of that issue.
Jeff, would you be able to respond to Eric's question on call center? And I thought I addressed back pay, but maybe I missed that on a reason to call the call center earlier. And also our hold times, people will get busy signals if they're not able to get into the queue, and we'd rather them not be able to get in and then not get through all the way and be on hold. We'd rather them have a busy signal and try and avoid that frustration. But can you just speak a little bit about hold times, wait times, and the back pay issue? If somebody filed, let's say, was eligible for separation, was in late March, and there's a back pay issue, how somebody goes about addressing that?
Yeah, so for the most part, we do not have a inordinate number of claims where back pay is now an issue. So the initial surge, that was one of the initial challenges. We were granting appropriately, so we were granting backdating. Usually in normal quote unquote times, it's an administrative process to get a claim backdated. We suspended that, and we're doing broad backdates appropriately so because of the widespread nature of the COVID-19 pandemic and its impact broadly on a number of industries. So through the initial surge, that was a little bit of a challenge. We've worked through that a great deal, and so we're not seeing a number of people who whose claim goes back to March, and they're still having challenges getting through. But in some instances, that might be a rare scenario, in which case they could backdate their claim, and then if they have challenges doing so, they might need to speak to an agent. In terms of wait times, hold times, again, going back to some of Cher's earlier points, we've got our regular unemployment insurance call center, and then we've also got our pandemic unemployment assistance call center. What we're seeing on the pandemic unemployment assistance call center is, one, the volume of claimants is less. So it's roughly 70,000 people that are current claimants, and then some some number graders, let's call it 20, 25% greater, that are perhaps attempting to file a claim. And so for that reason, the wait times for that call center and also, sorry, the complexity of that is far lower. So the wait times on the PUA calls are virtually none. You might get far less busy signals in terms of trying to get through, but the PUA call center, we're able to process those a great deal more efficiently. On the regular unemployment insurance benefits program, again, that's a base of 400,000 claimants. So a significantly higher percentage of our claimants are in that system. And as Cher said, it is not a streamlined process to get somebody that can effectively answer the complexity of the calls that are coming in. So on that one, there are going to be a great deal more demand for those services. There are going to be more busy signals coming into that. We're answering about 4,000 of those calls a day. Excuse me, about 2,500 of those calls per day. And you could experience hold times of an hour to sometimes up to 90 minutes, approaching 2 hours, depending upon the circumstances of that day and what might be happening throughout the course of a week. So generally, that's what we're seeing in our hold times and relating to busy signals and the like.
If I could just circle back to Andy and Joe's questions that are related regarding the refusals to return. The data set I gave you of close to 100 submissions, those are employer submissions. And again, there's duplicates in there. So multiple submissions from a single employer. We don't have data from the claimant side on their weekly or biweekly certification, where they should be reporting to us job refusals and the reasons. So that is a separate data set. These are only submissions from employers who are ready to call their workers back. And there's been a refusal to work. Again, the 15% is of those we've reviewed. The claimant has been determined ineligible for continuing on unemployment for, as Jeff mentioned, a number of reasons, including failure to provide documentation, either about living with a vulnerable population, or that their employer is not taking appropriate safety precautions in the workplace. 1,000 submissions. Sorry if I said 100. 1,000 submissions, nearly 1,000 submissions, multiple submissions from a single employer. Those aren't 1,000 employers, almost 1,000 submissions. I think Jeff's data point was around 600 or 40. And of those that have been reviewed, 15% of those submissions have been determined that the claimant would be ineligible to continue receiving unemployment benefits. 641. Ryan, do you want to go back up to?
Yeah, there were a couple questions I can address.
Okay.
I do have apologies. I do have a correction on Colorado's rank. I had included District of Columbia. While important, it is not a state. I don't consider it a state. So Colorado actually ranked 15th for unemployment rate, and they were tied with Montana. Colorado was tied with Montana and New Mexico. Again, that's the 15th lowest unemployment rate when you compare all 50 states. So I have a question of, do you have a sense if the household survey is capturing furloughed workers who might consider themselves employed? The Bureau of Labor Statistics did a real good job on their employment situation a couple of weeks ago, kind of detailing some of the issues with how respondents were interpreting the survey, the current population survey, and that if you had included individuals who perhaps misread the question and put themselves as out of the labor force instead of unemployed and attached to employer, the unemployment rate might have been instead of. That's very possible that the same thing, could trickle down to Colorado's numbers. We don't really have a way to break that out. But in the press release, we did, on the top part with the box section, we do have an FAQ link that we provided. So for anyone who's interested in kind of those methodological issues, please visit that link. Let's see, we also have a question on our employees and work share agreements included in the number of part-time employees. As part of part-time employees, I would prefer full-time figures. theoretically, yes. If they say we're captured in the current population survey and they felt that they wanted to work full time, but were working part time because of work share agreements, then they would be captured in those numbers. Also, a question on, do we have thoughts on how this cycle might play out compared to previous cycles, given the large number of workers who will be called back, but also the lack of hiring? That really gets to the question on what does recovery look like. You might have seen over the past couple months a lot of articles, publications regarding what letter of the alphabet the recovery might take. Is it L-shaped? Is it U-shaped? Is it V-shaped? At this point, again, this is the first full month of employment situation data to look at. We really only have 9 weeks of claims data. So at this point, it's really unknown in terms of what does that recovery look like. And I've been talking about this in our UI calls, but UI claims are still 3 times what they were during the Great Recession. So until those numbers, for a continued period of time, get below, say, that 5 to 10,000 initial claims levels, we still have extremely elevated claims. So it's really going to depend on differently by industry. Again, if restaurants can only open at a partial capacity, what is their ability to serve customers and make a profit? Also, what does consumer demand look like? So at this point, it's just there's so many question marks in terms of what does recovery look like, and what's the duration and what's the severity. Alex, do you have anything you'd like to add to that?
Sure. It's the way this recession is happening is we don't have any past data to compare it to, because typically we consider employment a lagging indicator, but here in this situation we have it as a concurrent, occurring as the economic situation worsens, unfolding. So yeah, I mean, you're right, Ryan, that we just don't have enough information yet to know what this looks like, because there are a lot of questions out there on what business labor demands will be as they return to being operational, and what fully operational looks like. Thinking about demand from consumers and the situation we're in. But then to address, there was another question back there about double counting in UI claims. And I would just point folks to that comparison. If you compare the claims filed within a period to the payroll jobs lost that are estimated from the Business Establishment Survey, it appears that there is very little evidence of double counting. I would expect if it were a big issue, we would see some inexplicable results in the comparisons when they actually make good sense.
Before I send it to Jeff to circle back on call center again, Wayne, we'll have to get you more information about work share. So that'll be a follow-up. Also, as far as I understand, the waiving the requirement for work search is still in place. Jeff, unless you have something else to indicate it's not. That was a question from Wayne.
So yeah, that's a great question. So we're trying to be nimble as the situation evolves. And so yes, there was an emergency order that was put in place with regards to work search. We're looking to amend that within a short period of time to the level that's appropriate, and with the appropriate caveats with regards to more vulnerable populations and so forth. So we're likely going to be looking to amend that in the coming weeks, I'll say. And did you want me to address the other one, Chair?
Sure. Okay,
so there was a question about another follow-up question about callbacks and leaving messages. As Chair indicated, we have a callback within the website that it specifically addresses new claims if you have a challenge in filing a new claim. And that queue is being worked daily. And so we've got a dedicated team that is working to address those on a daily basis. It's typically only taking a few business days to get to that back to those folks. We have not. No, you cannot leave a message at present and we don't currently have broader categories. But as Cher said, we are actively exploring that. We think it might be a more effective means to get to some different categories. What we're trying to do, however, is balance the concept of just creating really long lines on multiple different topics, right? Because the staffing is finite, and we have to address incoming calls as well as anything that's called back. But we are looking perhaps to expand the options with regards to getting a call back. In terms of people getting frustrated with delayed payments, yes. So I think it's appropriate to mention a few things. If you're in regular unemployment insurance benefits, the request for payment is on a 2-week cycle. So if you request, if you file a claim on a Sunday, for example, and you're approved for benefits, the timing to request a payment will be 2 weeks from that Sunday. That will be the beginning of the window for you to request payment. So some level of understanding and patience is necessary to understand that it's a 2-week look back. And so therefore, the day you file or shortly thereafter, you will not be getting payments based upon how the system is set up, because what you're doing is you're going in and testing to say, yes, for the last 2 weeks, I did not work, I did not get a call back to work, et cetera, and I had no earnings, et cetera. Also, I want to, if you're in PUA, it's on a weekly cycle. So same understanding there. The other thing, and it has been an issue, so some claimants don't realize, perhaps they're not absorbing fully the communication that they're getting, but some people don't know that they have to actively go into the system and request a payment. That's another thing we need to emphasize here, is that in some instances, we're getting people who call us and have been trying to call us and say, I've never gotten a payment. Well, we find out but they never went in and actually requested a payment. So there's multiple steps. You need to pay attention to the steps, and you need to have some patience in terms of the normal cadence, and you need to actively go in and request payment.
I think that's a point that can't be overstated also is, again, we have over 475,000 people, probably majority of which have never had to file for unemployment before, and certainly is a complicated process to navigate. And unfortunately, it does always require action on the part of the claimant. This is where they're telling us they're still eligible for the benefit, they're able and available to work, and we need that certification to make the benefit payment. We need it particularly now, because if they are refusing to return or turning down any job offers, that could impact their eligibility. And the last thing that we want is to have a group of claimants who we discover when we do adjudicate these claims that they weren't eligible for unemployment. And then that sets up an overpayment situation where we have to collect those wages because they weren't eligible. That is the last thing that we want. I'm sure it's the last thing the claimant wants. But that weekly or biweekly certification, we are seeing a number of calls coming into our staff and our call centers, wondering where their benefits are. And it's simply because they have not requested that benefit payment. And it is one of the how-to guides that we're producing in our video series so that it's as clear as possible to the claimant. I just wanted to go back to, I think it was Brian's question about WARN notices. I don't know the exact distinction between the categories of reason for workforce reduction. I will say, of the WARN notices we've gotten, it seems like most employers are citing COVID-19, regardless of the circumstance of the workforce reduction. So if it's a temporary closure, furlough, full layoff, it seems like overall they are all citing COVID-19 as the reason. Ryan?
All right, so we have a question on about nationally, we saw an average hourly rise because of the loss of lower paying jobs. To what degree is that happening in Colorado? I would say very similar trend happened in Colorado in terms of what we're seeing in the April data. On an over the year basis, private average hourly earnings increased from $30.35 in April 2019 to $31.98 in April 2020. And that's a 5.4 percentage point increase from the prior year. I don't recommend comparing month to month, but again, the March wages earnings were $31.01. And again, that's compared to April's of $31.98. And really, this is, I think, due to that compositional effect of where you see a large exodus of individuals in lower paying jobs, lower paying industries. And at an aggregate, that's going to increase that those average hourly earnings. Although, looking for a follow-up, but I think you're asking about, do we have a sense from UI premium filings from employers for Q1? Do we have a sense of how many establishments have gone away or didn't file? Really, when looking at total contributions, those were right in line with what we expected. I don't really anticipate kind of seeing that impact, if we do see that impact, until a second or third quarter filings. So that's something we'll look at, and also internally with kind of what we're getting in terms of QCW data from the quarterly census of employment and wages. Alex, is there anything you want to add in terms of the wage component?
No, Ryan, you've got that right on. I mean, obviously the makeup of the jobs that we're looking at here have a huge impact on this. So we'll see how this kind of pans out over time.
Ryan, Jeff, I'm not sure how we respond about businesses reopening and how to make a distinction between permanent layoffs and job attached. I don't think, again, we have the ability to drill down with those in claims data. But also, Ryan, this might speak to the continued claims question. We didn't get it during the call, but we've gotten it previously from a number of reporters. Can you just speak very briefly about continued claims and how those could be a valid data set, but it's not telling the full story of return to work and impact?
Yeah. Again, in our weekly calls, I cover the initial claims, but also then the continued claims. We are working on trying to get, at least on the county level, some continued claims data published. I don't expect that, though, for a couple of weeks. But again, you can, we have the state data in terms of, how many continued claims, and those are starting to, level out or at least plateau over the past couple of weeks. But from that, we can't really tell in terms of, if a person dropped off the UI roles, it could be for a number of different reasons, and not necessarily that they have returned to their job. So unfortunately, that data is kind of definitely difficult to really parse out and get at on a weekly basis or even a monthly basis. And some of that may even take, if we can even get to that type of analysis, several months.
So a couple things, the video tutorials, members of my team are actually on the call today. They've been working the last couple of weeks on taking those reasons for calling into the call center and most frequently asked questions as reported by the new chat bot that's on the website, and creating video content based on those topics. So we will be sharing across a number of platforms, including social media, our website, and sharing with other partners like our local workforce center partners. Ideally, we'd have those in at least Spanish and ability to translate into different languages upon request, but we're still working through what that would look like. The town hall series has been very successful in terms of the reach that we've been able to accomplish with tens of thousands of claimants at once in both English and Spanish. The next one we have scheduled is next Wednesday, following Memorial Day. We don't have the times yet, but we'll be posting those and sharing those out through a media advisory once we have confirmation on time.
Sure, can I just address some of these questions real quick?
Yes, please do. We have about 3 more minutes.
Yeah. So in terms of business deaths, I'm not sure if the Secretary of State, they might be able to. I know Brian Lewandowski with CU really uses that data set a lot, but The Business Employment Dynamics Program from the Bureau of Labor Statistics will track business births and deaths. However, that will have about a 6 to 9 month lag. So later this year, you'll be able to kind of view in terms of how many businesses have died in Colorado over this period of time. Question on, can we break data down by gender, race? In terms of what I presented on the employment situation, no, not really, but we do have that data available for weekly claims. And in terms of labor force dropouts, again, some of that might be individuals who are discouraged and can't find work. The other part of that could be due to individuals who are perhaps misinterpreting what the population survey is asking, and they maybe should be categorized in that unemployed temporary layoff category. So again, there are some issues in terms of how we're measuring labor force. So that's why I emphasize at this time to really utilize the employment to population ratio I presented earlier. Again, that was around 59.1% for April.
Ryan, I think you addressed all those questions. Sorry if I missed that. And then there was one from Matt Bloom, unless you addressed both of those and I missed those. And I think that's it.
Yeah, yes, I tried to address Matt Bloom's question.
Okay.
Yeah.
Okay. So I think I'll close this out. If we didn't get to all of your questions, feel free to send me a follow-up phone call, text, or email. I would just say that sobering news, and yet Colorado still is, among the lowest, although at some point that's irrelevant to those who are suddenly out of work. But there are resources on our website, 211 assistance, and other resources we've listed for folks who are struggling. And we'll continue our weekly initial claims series. And again, this is a monthly series. Ryan, you may want to just, if you know the date for the June release, you can share that will be the May employment situation. Again, likely the week where we have an employment situation release, we will just combine the initial claims release. And then if we didn't get to anything that you had to ask today, just give me a call. And Ryan, do you know when the next release is for June?
Yeah, so that'll be June 19th. Mark it on your calendar. That's when we'll have preliminary estimates for May and then the revised numbers for April. So that'll be really important, again, to look at what those revised numbers are, because they will change.
Okay. Well, thanks for joining us today. Have a safe holiday weekend, and we'll talk to you soon. Bye-bye.